No doubt you've heard of American business magnate Warren Buffett. His captivating personality, entrepreneurial skills, and world-class investment strategies have made him one of the greatest investors of all time, with a net worth of $103 billion. Buffett has been commenting on inflation for decades, and in doing so, he's revealed strategies that can help you thrive even when prices are rising. In this video, we'll explore the most crucial steps you can take to safeguard your finances and even grow your wealth during inflation. Inflation is one of the hottest topics today as we face the possibility of another recession. Its impact isn't limited to the United States. It's affecting Europe and many other parts of the world. But let's shift focus for a moment. Are you satisfied with your financial future? Or are you struggling to make ends meet, feeling weighed down by rising expenses? If your goal is to build a financially stable future, even one insulated from inflation, you're in the right place. We'll now reveal Warren Buffett's proven strategies and life-changing advice on how to make money during inflation. Warren Buffett versus inflation. Buffett has long warned about the destructive power of inflation and shared ways to not just protect yourself, but thrive in it. Why? Because he's been through it himself as an investor, and he doesn't want you to repeat the mistakes he once made. As CEO of Berkshire Hathaway, Buffett has explained how inflation erodes purchasing power. He knows that even a 5% bond yield won't protect you if inflation rises to 6%. So, how can you continue to grow your wealth despite inflation? Follow these 7 timeless steps from Warren Buffett. Step number 7. Invest in companies with strong pricing power. When investing, focus on companies that can maintain profitability even when costs rise. Think of Apple or Coca-Cola. They have loyal customers who accept higher prices without switching brands. Such companies can survive inflation because they balance rising costs with strong demand. On the other hand, some companies exploit inflation to raise prices opportunistically. During COVID-19, companies like Kroger, CVS Health, and TJ Maxx's parent company, generated massive profits, some as high as $99 billion, while others faltered. Step number 6. Compare investment returns to inflation. Your investments should outperform inflation. Even a 10% annual return isn't enough if inflation is 7 to 8%, leaving you with just 2 to 3% real growth. Interest rate bonds might feel safe, but recent reports show they can yield negative returns once inflation is considered. Even a small profit is better than losing money, but always measure returns against inflation. Step number 5. Recognize and leverage your strengths. It's never too late to develop skills that are in demand. Focus on what you're good at and passionate about. Talent and skills remain valuable during inflation, making you more resilient financially. Step number 4. Avoid unproductive assets. Gold is often seen as a safe haven during inflation, but Buffett disagrees. Gold doesn't produce income, its value doesn't grow on its own, and it doesn't compound over time. Instead of hoarding gold, focus on assets that can generate returns. Buffett emphasizes investing in productive assets that grow over time. Step number 3. Start low-capital businesses. High startup costs shouldn't stop you. Sometimes, working smart outweighs working hard. Low-capital businesses allow your skills to shine without massive investment. Consider digital courses, content creation, software solutions, or event planning. These require minimal investment but can yield substantial returns. Skills-based businesses like graphic design, coding, copywriting, or social media consulting keep you relevant and competitive while generating income. Step number 2. Invest in assets that beat inflation. Buffett prefers stocks over precious metals. To profit, focus on quality, not quantity. Analyze each investment thoroughly, considering long-term growth potential. Timing matters too. Don't follow trends blindly. Buffett's famous advice: be fearful when others are greedy, and greedy when others are fearful. Only buy stocks you can hold for 10 years or more. Long-term ownership allows you to understand a company's true nature. Step number 1. Invest in yourself. Ultimately, your best asset is you. Whether you're an engineer, teacher, baker, office worker, entrepreneur, or doctor, invest in your skills. Education paid in old dollars must translate into skills valuable in today's economy. Learn new skills, adopt new technologies, and stay ahead of the competition. By improving yourself, you make yourself irreplaceable. These steps from Warren Buffett do more than protect against inflation. They're a blueprint for long-term financial success. Inflation may rise unpredictably, but with preparation, you can turn it into an opportunity rather than a threat.